Peter, I'm going to stop there if anyone else wants to chime in. Peter or C, anyone else?
Well, I perfectly align with Ragnar says. We were also able to beat one of the builder loans offer. Ramesh, do you remember the Nevada purchase loan that we're doing right now? I think you're on a mute or your microphone's not working. I'll just briefly explain. So as this offer looked better on the investor's point of view, but as we were diving into specific details of the purchase agreement, when the repair cost is greater than $25,000 for the purchase, now the builder was obligated to give the same amount of lender credit to any lender that the buyer chooses. So when we were doing the inspection, buyer chose, and after the designing, now they're repairing more than $40,000. So I became out of the blue better option than any other investor and the builders offer out there. So as soon as you hear the investor name or the new build name, take a look at the specific details of how the lender credit or builder credit is going to apply for the purchase loan. And ultimately, we were able to win when a file almost was just walking away from us. I hate to hear when buyer says, "Oh, I'm thinking of putting an offer into the new build," but surprisingly, a lot of builders are thinning out. They don't give out those gracious $30,000-$40,000 credit anymore. It's only $8,000 to maybe $20,000 depending on the situation. There are a few investors working with lender or builders have their own mortgage company, like Lennar, for example, has their own mortgage product at 4.99, 30 years. But how many transactions are we going to encounter with those, right? Maybe 1 out of 10, maybe 2 out of 10. So we don't have to focus too much on the niche. Just look into the larger, broader audiences and try to engage into that manner. That will be easier for us to win later on. So the reasons why we were emphasizing on jumbo loans specifically is jumbo loans are designed to use multiple index points. Regular QM loans are using 10-year treasury bond, but non-QMs are using SOFR as an index. SOFR rate actually went up. You're going to be surprised when QM rebates are going up, your bank statement loans and jumbo loans rates are getting higher. It's going up, actually. They are inversely proportional to one another. So don't be afraid to give out the prime rate for the non-QM. I'm going to share one of the screenshots that I'm sharing. So these are the loan products that I was selling with a 1% rebate about 2.5 weeks ago. Now the rebate got better. With the same rate, we were getting 2.362 for the investment, for primary for 2.625 with 2.02 rebate. So I'm disclosing one point on both deals. It's a refinance cash out transaction, and I'm offering these two rates. I was expecting, I don't know, maybe 9,000, maybe 8,000 combined, but it's turning into 30,000 plus. If you play out the 10-year treasury bond game and the loan sifter correctly, you don't have to be captivated with NMSI or New Wave or some of those, because they are capping you with rebate of 1.75, right? When you run the pricing from their portal or from the loan sifter. But if you truly use the Caucasian, the East Coast lenders and investors, all these regulations, underwriting guidelines we were trained and educated, it no longer applied. We are going above 2% rebate, 200 basis point on a jumbo. This is unheard of, but it's happening. Per investor agreement, we can go up to 6. So imagine I'm just excited for the refi boom to come. We can easily cap into 2s and 3s rebates and still win. So if you have a trouble accessing loan sifter, Brenda, please help those individuals, give them the email access so that it goes in right away. Yes, Ian.
Oh, I'm just saying hi to Brenda. Yeah, include me in that. That's mind-boggling, right? I mean, yeah. I think we're gonna get much better bond pricing in the coming days and weeks. So very excited about that.
Yeah, I'm emphasizing on the loan sifter again. Same pricing with a new FI is 1.25, whereas Plaza is giving 2.3625. It's more than 100 basis points that we're talking about with the same loan product. So where's NewRez? NewRez is not strong with the cash out. Their LLPAs are a little bit higher, but it's okay. We have multiple investors that we can send it to. So that's why.
Peter, can you say Plaza is, how much better are they than compared to NMSI?
Minimum 50 basis point.
Even in conforming?
Conforming is different. They're different animals.
Right. Okay.
Everybody has everybody has a different approach. Each investor, NMSI is the strongest with conforming.
Okay. So they still reign supreme then. I thought somebody else would give them more.
Non-conforming, IBEL, non-conforming loans, NMSI is not the best anymore.
Okay.
So anything under 806, $806,000 or lower, NMSI, JMAC, like New Wave, those guys are very strong. But on the other side, FHA, VA, DSCRs, don't even consider them. Loan
We
help you
should
to
go to their 7.6 arm. I saw an email from UWM pushing their 7.6 arm, where they're pushing, if you buy it down 1.5%, you could be in the low 5.5s.
Yes, that's available. But
anyone else offering that besides UWM that's competitive?
The catch with them is so when you run the loan sifter or when you run the Calyx point, we use the note rate and the qualifying rate. When the adjustable rate mortgage is 7 or lesser years, we use note rate plus 2% to qualify. So if it's 5.25 note rate for 5-1 arm, for example, that you're selling to UWM, you have to put 7.25 on the qualifying rate to see if the DTI makes sense. And adjustable rate mortgages has a debt to income ratio below 45%. So for high yield, better finance guys can apply and get it done. It's not for everyone. That's why it's seldomly difficult to sell the adjustable rate mortgage, because we have to look into two different perspectives. Note rate perspective.
For 7.1 on for 7.6, is that?
Most of the times they are the same.
Okay, it's the 5.1. If the 5.6.
Yes, 5.1 or 3.1.
Got it.
The reasons why NMSI is UWM is doing that is because they just launched a Chase Bank's ARM product. But if you compare that to Florida Capital has a better rate.
Okay.
If you compare the ARM to ARM, apple to apple.
Okay.
Only thing that's different is their service. They're easier to price out.
Agree.
Any other questions? If not, then I'll just quickly end the meeting with two announcements. One, we are now increasing the processing speed by working with another processor. Welcome Ricky to our team. He will work in the same manner as Brenda, Rami, to help you guys to answer A through Z, running the pricing through the DU and LP findings. So please reach out to him directly if you have any questions. And second, we are opening up new investors later this month. And so I will be traveling to Tennessee in the second week of March until end of the March. So I'll share a bit more with specific dates on the next meeting. So if you want to set up a meeting with me, anyone who has a weekly meeting with me, I'll individually share the details. If not, please look into my Google Calendar and assign the meeting time accordingly. Okay, thank you everyone. Have a great week and see you all next week.
Have a good one. Bye, guys.
Peter, bye team.
Nice meeting you, Ricky.